a very warm welcome to all of you who have had the stamina to make it to what I heard is the last session of the 10th Delphi Economic Forum. Huge congratulations to the Delphi Economic Forum team and the Tomokos team for 10 years of thought-provoking discussion. It was actually 10 years ago that the concrete plan for a capital markets union was tabled, although this plan has been discussed for 30 or 40 years. And during these 10 years, there has been a lot of change in EU priorities. We've had COVID, we've had Brexit, we've had a number of national crises, including Grexit, which we've kind of forgotten about. We've had Ukraine. And at the same time, the Greek capital markets have been through quite a journey. So leveraging on the transformation that has happened in the last 10 years, leveraging on all that we have learned in the past decade, we are here to discuss, and I hope debate, if the speakers allow me, whether policy and legislation can boost European growth by integrating national capital markets. I'm honored that our speakers do not need an introduction, but for formality purposes, let me start with Vasiliki Lazarakou, Chair of the Hellenic Capital Market Commission, member of the Board of Supervisors and Management Board of ESMA, who also holds a number of leadership positions at the IOSCO, OECD Corporate Governance Committee, and Joint EASAs. George Hadzinicolau, Chairman of the Board of Directors of Piraeus Bank and the Athens Stock Exchange, and member of the Board of Directors of the Energy Exchange. And Mario Nava, with whom I'd like to start today, Director General of DG Reform at the European Commission, in charge of structural reform, and who also has a bit of a dark past, may I say, in financial stability, capital markets, and financial services. So starting with you, Mr. Nava, just to help us frame the discussion. Over the last couple of days here in Delphi, we have been talking about tariffs, and we've been talking about the impact on European competitiveness as a result of that. However, the impact has not always been as a result of noise and actions from across the ocean. In fact, just a couple of months ago, the lack of innovation was named as the key constraint of growth. So if you could please help us frame the discussion by talking about what the constraints of growth are at European level and what measures have been identified in order to improve the situation.
Well, thank you very much, first of all, and thank you to the Delphi committee. Allow me to join in the thanks, because not even in my wildest dream I could imagine to sit on a panel just after a Nobel Prize. I mean, I'm completely bluffed by having met Chris Pisaridis, who incidentally was my professor too many years ago at the LSE, but really, congratulations to the Delphi Forum. Now, I think you touched a very important, you mentioned my dark past, which indeed, yes, I did 16 years of financial regulation, of which 7.5 years at the Basel Committee, so probably a very dark past, and several years with Vasiliki sharing the board of the ESMA. Now, first of all, the important thing is to understand that whenever you talk about something real, it has an immediate impact in the financial economy. Tariff and capital markets has been the most evident things. What has somehow, I don't say directive, but let's say guided, shaped the movement on tariff in the last few days, it's really capital markets, both equity and bonds movement. I think they have shaped that. Now, the link for us between capital markets innovation is has been put in evidence in various reports. Probably the most famous one is the Draghi report, and on the basis of the Draghi report, as the President said, as Ursula von der Leyen said, we translated the Draghi report into something which is called the competitiveness compass. Everybody knows the three purposes of the competitiveness compass. One is what you said, closing the innovation gap. The second one is decarbonization. The three is defense. Less people, have gone further in reading and see the how. How do we manage, how do we imagine and consider to achieve those three goals? And there, in the competitiveness compass, we talk about 5 horizontal enablers. I can take that enablers may not be the nicest of the word, but you understand what it means. And the 5 horizontal enablers are: 1, simplification. And in these days, in Delphi yesterday, I was on a panel, there was a good discussion on simplification. Should the Commission feel embarrassed that we simplify? My theory was absolutely not. Why should I feel embarrassed? I mean, it's clear that on many areas, we have been the first in the world. I mean, think sustainability, think everything we have done in sustainable finance. We have been the first in the world. If we got it right, then yes, we would all be Nobel Prize. But the Nobel Prize don't work at the Commission. So very simply, we didn't get it right in the first point, and we correct a bit. There is nothing wrong. That's why it's called policy making. So I'm absolutely not embarrassed about simplification. Very good. Second, lowering barriers to the single market. And there we do know that in some areas there are barriers bigger than in others. Third, and that's the point probably of today, financing competitiveness. And then I hope we will have some time to look at the Saving and Investment Europe and Union and to look at the numbers and what may underpin. But it's clear that competitiveness and innovation, they need some what is called hot capital to be financed. They cannot simply be financed in another way. And then promoting skills and jobs. We dedicated a full panel yesterday at the Delphi Economic Forum, so we don't go back to that. And finally, and this is very interesting to remark, is the coordination of policies at the EU and national level. One thing that we have learned in doing policy making in the last 10, 15, 20 years is that you need both to push. You cannot hope that Brussels solves it or that is always the fault of Brussels. Brussels does not exist. And, you know, the European Union are delegated powers. So we have the powers that the country have delegated us. And that's what it is. And if we manage to do better coordination between the policies at the EU and the national level, and for that we have the European semester, which is objectively stronger and stronger into the coordination of the policies, then I think we have probably achieved a good thing. So to respond to your question, yes, the link is there, and yes, I believe we do have the instrument to make sure that capital markets more and more become functional to the real goals that we have.
Thank you. Moving on to Mr. Hadzinicolau, we've heard Mr. Nava talked about hot capital. The competitiveness compass talks about the EU's massive financing needs. And you've seen it all. You've seen it abroad, you've seen it in Greece, you've seen it in your role through the good years, through the not so good years. How realistic do you think it is to channel the capital towards investments in Europe?
Thank you, Nefeli, for the question, and thank you for giving me the opportunity to share this panel with some distinguished speakers. Let me take a page out of what Mario said. They try to simplify things. And just first things first. We talk about massive financing needs. I think Europe, the savings pool in Europe is enough to meet those funding needs of Europe to finance these ambitious plans. As the European area is one of the largest savings areas in the world, so the pool is there. I think the issue is with the plumbing, if I can put it this way. And just to allow me to frame the issue so we can understand what I mean by that. The question of you can view the financial system as a plumbing system which tries to connect the savings pool with the investment needs. And imagine basically a couple of very large pipes, one of them being the banking system, the second being the capital markets, another one being insurance companies, a third one or fourth one are smaller specialized areas, and particularly one I will refer to, which when Mario referred to the innovation, which is specialized areas where we need about talk about venture capital, startup capital, areas which are highly specialized. The challenge that we have in Europe is that 75% of the flow of funds from the savers to all this investment needs is going through the banking system. The banking system, we all know, it's a highly regulated system. It is designed to provide lending capital, primarily in the form of borrowings, okay? However, the ecosystem, as even witnessed by what Mario said, it requires more. It requires equity capital, it requires other forms of funding, which are highly specialized, which unfortunately, whether we like it or not, in Europe, we lack. And instead, despite the efforts of the past 10 years with the capital market union initiatives, and also the effort which goes back even longer to remove the so-called Giovannini barriers, because capital markets have many layers. We talk about the trading, there's the post-trading, which consists of clearing, the depositories, and when you basically allow me for a minute to contrast the US, which has a multiplicity of exchanges in the capital markets, which are all connected through the consolidated tape to show the best bid and the best offer as if at one single market. And then there's one clearinghouse, and there is one depository, okay? With one single unified legal system. And then contrast it with the European terrain, where there's a multiplicity of trading platforms which are not fully connected. There's a multiplicity of clearinghouses, multiplicity of depositories, different legal systems, and also many different practices among the national markets. So here is the challenge: how we will be able to meet the ambitions, which I think the Draghi report sets out a very ambitious effort, but the challenge is how we will find ways to channel those able savings into the useful and the productive investments. And the challenge is highlighted by the fact that 100 trillion of euros are sitting now as deposits with the European system, okay? So what is happening here? I will just post that at least in part reflects the structural rigidity that exists in the system, but also there is another dimension which we need to bring out. It's the behavior of the investors themselves. Either they don't have the choice of investment instruments in order to expand their investment horizon, instead of basically putting their money in deposits, houses, as we do here in Greece, and maybe we'll buy some bonds, okay, into a wider choice. And maybe that reflects the lack of understanding as well, which goes straight to the so-called financial literacy, which is a major issue, because if you contrast this, for example, again with the average American consumer at the household, they are involved with the stock market through their savings plans, through their individual pension plans, through direct investments. There is a completely different, if you want, and also there is a completely different choice of products, which allows you to weigh appropriately the expected returns with the required risks, with the risks that come along, and people have choices. So I think it's a combination of lack of availability, but also of lack of knowledge, which speaks straight to the financial literacy challenge.
The HCMC has done a lot of work to address the lack of knowledge, so perhaps you could talk to us a bit about that.
Thank you, Maria Nefeli. Actually, George Hantzinikolaou made my work very easy, because it is clear that financial literacy is a top priority. We want to have well-educated investors who understand the risks and understand how to invest, which are the options. Because as we heard, there are so many trillion of euros sit in the banks. Why? Because they don't really understand which are the options. They don't know maybe which are the options. And so financial literacy is number one in order for the investors to understand what is going on in the markets. Now, we had some years ago, when Mario Nava was the head of the DG Reform, we were lucky enough to have Mario Nava, who is a visionary, and he was assigned actually to OECD, and after that we had a report on the national strategy. After the report of the financial literacy, let's say, how we are right now as far as Greece is concerned, there was a national strategy that was that was drafted. And in this context, the HCMC has done a lot of, let's say, actions in order to see how to further raise awareness with respect to financial literacy. Also, being member of IOSCO, we are doing a lot of in the context of IOSCO. So with IOSCO, we have done several, let's say, actions concerning to specific issues that each time we have, let's say, as priority. For example, we had issued a statement on online harm. And we are trying to have a portal where all regulators are going to send the warnings so that investors are aware of who is not authorized to provide investment services all over the world, not only in Greece, because nobody will, let's say, check the website of the Hellenic Capital Market Commission. But if we have a portal which is for the world in general, that helps a lot the investors to understand where there is and who is non-authorized to provide such services. Now, as part of the national strategy, we have done several actions. For example, we found out in the report that it is important for the young generation to be aware of financial literacy issues. So now we are planning to issue a book for 10 years old children that wish to understand how financing works. Then we have signed MOUs with the universities. So we started teaching at classrooms about financial issues, about capital markets more specifically. Also, we have signed an MOU in order to have some postdoctoral, let's say, students to try to find out how simulation works on the options that somebody has to when somebody wants to invest in mutual funds, or several other actions in order to try to encourage further the investors to get to understand better how financial markets operate.
That's fantastic progress. So we've talked a lot about the need for simplification, and we've also talked about educating the investors. So, Mr. Nava, we've warmed up to the question, I think. Would we be better off with the European Capital Markets Union?
Thank you very much. The short reply is yes, and many times, and now I'll argue it. Let's start with few numbers. So if we have the numbers in mind, it becomes much easier. The GDP of Europe, what you produce by working every day, is about 18 trillion euros per year. Out of those 18 trillion, the Europeans save about 1.4 trillion per year. Okay, that's saving rate. For a comparison, the GDP of the US is 27 trillion euros, and the US saves only 0.8, okay? So they have a GDP which is 1.5 times ours, and they save 60% of what we save. So we have a huge saving. On the top of that, aside, we have an incredible amount of 33 trillion euros, essentially in currency and deposits, which is dormant in the banking system. So not only we save lots of money every year, but we also have a big amount of money, a pot, as if we had an oil reservoir somewhere from which we can take. Now, what happens to these 1.4 trillion that we have now? Exactly because we still do not have the capital market union, and exactly because we still do not have a single market for investment, of these 1.4, 0.3 goes out typically to United States. And by going out typically to United States, it goes out as saving, it gets there into a financial instrument, and becomes back as investment. So in a way, if you want, we as Europeans, we behave a little bit, and with due respect, like the Arab countries who have got oil, and they send it to us to refine, and then they buy back the fuel. And that's exactly the same thing. So we have saving, we send it to the US to refine, and we get back investment. That's not particularly logical. I think we can do much better. And we do much better on a part, but still the part that goes out is huge. And is huge to the point that even if at the beginning there is a difference of 1 to 2 between the saving in the US and the saving in Europe, because of this transfer, basically it becomes similar. So clearly the numbers are overwhelmingly in favor of that. Now, what is Capital Markets Union? I think Mr. Hantzinikolau was absolutely correct. It's an issue of pipes, it's an issue of connections between the different systems. Not only, of course, is an issue of products. There are some products where the Capital Markets Union does function well. Think of UCITS, for example. You all invest in UCITS. When you invest in UCITS, you don't care whether the UCITS start with LU or IE or FR or GR. Doesn't matter. They are all good European products, and you can invest in that. The point, the crux of the matter is really to make sure that we manage to do the same with other programs, with other products. And obviously there also, the demography is such that we need to think of aging. Aging in financial market means pensions. We, in Europe, we have the best pension system in the world. It's mostly public, but there are private parts, either Pillar 2 professional or Pillar 3 totally private, that may emerge. If we manage to channel those parts into the private sector and into the capital markets, then we have done a lot. And here, let me say you one thing. Everything that Vasiliki said about financial literacy is absolutely correct and absolutely essential. However, that is not enough. That is a necessary but not sufficient condition. The sufficient condition is that the products that you find around are much simpler. Because unless you are a Nobel Prize, again, we are all bluffed by having seen Chris, unless you are a Nobel Prize, there are some products which are incredibly difficult to understand, but incredibly difficult to understand. And, you can do as much financial literacy as you want, but if the product is so complicated, people just don't get it. I don't get it myself. I mean, sometimes I have 3 young daughters who are all starting to work. They start thinking about pension. They ask me, Papa, I don't understand. None of the 3 is an economist. And they tell me, I don't understand. What is these things? What am I investing on? And I must confess, many are very complicated. So I think here, the private sectors, the banks, listen to me, need to make an effort on simplifying things a lot, because otherwise it doesn't work. And also, we as citizens, we need to pretend that whatever financial assets we have is presented in an understandable way. Another, hopefully, good work that we did with DG Reform, and now we continued with DG Employment, is tracking the pension. If I ask to each and everybody of you, how much pension will you have when you turn 65? At best, you don't know it. At best, okay? So at worst, you have a wrong idea. But if you don't know it, it's better than to have a wrong idea. So that is the point. And what we are doing is something called tracking the system. Is a website called Find Your Pension. We have 7 countries who are joining it. The dream is that the 27 join. And so that when I ask this question at next Delphi Forum, how much do you get when you go in pension? You look at your telephone and you are able to say. Knowing how much you get the day you go in pension is essential for the financial investment you need to make.
May I add something?
Yes,
because I'm fully in agreement with Mario, and I want to add something because it's not very often that you see regulators coming out with proposals regarding policy issues. So it was the first time, actually, that ESMA sat down and we decided to see what kind of recommendations we can provide in relation to the growth of the European market, or the European capital markets. So one of the recommendations was exactly what Mario mentioned now, about having simple products. Yep. And if I may add, because we have all read the excellent comments of the Draghi report and the Letta report, one of the issues that is very important is not only to have simple products, but also, if it is possible, to link it at a European level, of course, to link it with tax incentives. Absolutely. Because then a European citizen in Greece will feel the same like a European citizen in Sweden, like a European citizen in Norway, in Italy, wherever. Why do we need this? Because we need to have the feeling of unity in the Union. It is important that we all feel that we are citizens of Europe. And that will help, because by this kind of simple products, with tax incentives or no tax incentives, but it's important to have tax incentives. Because why do I say this? Because we speak about the Sweden model. One of the let's say important things that in Sweden they did were to have tax incentives in products or in accounts. So it is important to have similar products all over Europe. Because I think we need to have the capital market union. We cannot continue like that with fragmented markets. It is important to have a union. It is important right now to proceed as fast as possible, because there is the momentum right now, there is political will, and I think we need to make sure that we don't miss it.
Mr. Hadzinicolau, we've heard two very strong views in favor of the Capital Market Union. So I need to ask you, especially in your role as chairman of the board of directors of the ATHEX, are you equally optimistic about the attention national companies will receive in a Capital Markets Union?
I mean, when we speak from a theoretical point of view, who could argue against a single European market which creates a single pool of capital which can be accessed by all the Europeans, and this single pool of capital would create investment opportunities of whatever variety you can think of? Beautiful dream, okay? Beautiful. Who can really basically oppose that? But what is the reality? The reality is, after 10 years of effort, we are still faced with a lot of rigidities. Let me also add a little bit, again, trying to simplify, which brings at home the real question. What is the real world? Is there basically a world where we have this central pool where everything, all the savings go to this central pool, and then which are beautifully allocated to all the parts of Europe in a magical way through the free market? Who would not buy this dream? But what's the reality? The reality is we have a series of national markets which effectively do, in the absence or the difficulties we have to do this beautiful dream, they recycle the savings locally. And we have also within that context two examples that I will refer to. One is Sweden, and the other is Europe, Holland, Netherlands, where you have highly developed, because Mario said, who knows the pension system, highly developed private pension plans, okay, which unfortunately we've been trying to set them up here in Greece unsuccessfully. Why they are so important? Because they are a continuous flow of funds to the local pool, from which creates the preconditions for the investors to come in and tap this pool. So keep that model in mind. One is the beautiful dream, and the other is the reality of the national markets, which recycle the local savings. Here, where we are now, we are much closer to the second. This is the reality. I'm not advocating we should stop. We should try to get there, and because I am with you that this would be a beautiful thing to have, because we need to keep that we do not live in mind that we do not live isolated. We live in a world which we are competing with the US capital market, which, as Mario says, it takes out 300 billion every year. Why? Because it offers choice. So this is our real competitor. Until we get there, we need to have a path to get there. And what is our experience here in Greece? Our experience in Greece here is that we provide practically for the smaller and medium corporations funding alternatives we would not have, at least currently, available to Europe. And even the larger ones, and I will refer to 2-3 names that left the Greek market, larger issuers like Viohalco, and Titan, and even I'm sure the same thing is going to happen with Mytilineos, who is aspiring to be listed in the London Stock Exchange, which is not exactly Europe today, at least. But what we are observing in reality is these dual issues, most of the trading is taking place locally. The liquidity for those names which are presumably listed in the European fora is taking place in the other stock exchange. But just to make sure that I'm aware of the limitations of this model, even these medium and small corporations that they have access to funding in the other stock exchange, in effect, we are able to provide this service because we make, as an ATHEX stock exchange, more money when we have large issuers. And as long as we are creating an integrated market, the large issuers will go to the larger forum because that's where the larger pool is, that's where they're going to have a better funding cost. So this is a limiting process, and we need to be aware of that because we are getting there. but we need to really spell out the path to get there, because we cannot say we're going to get there unless we have a, perhaps, who knows, a Trump approach into this radical approach where basically with one shot we break down barriers and we make this happen. I don't know. But obviously, this path which we have followed over the past 10 years, in my view, has not been satisfying.
Mr. Nava, we've had a bit of a reality check here. We've received feedback that perhaps it's what you've been talking about is an oasis that's hard to achieve. What's your answer about how local capital markets, especially the smaller capital markets like Greece, will benefit from the Capital Markets Union?
Well, you know, even small capital markets may sometimes need to grow, or they simply produce a startup that at some point grows, you know. And that is one bad thing of Europe. Europe is very good in generating startups, the little company that produces an app or that does some brilliant products. But then when the startup has to scale up, exactly because of what Mr. Hantzinikolaou said, the markets are small, the markets are local, they scale up in the US. In the past, to be honest, before Brexit, we had a simpler solution because UK was UK. Yeah. In the past, the single market was issuing from London. That was very simple. Then we lost it. We lost it, and now I think we need to reconstruct. There is a good idea, whether there is a good debate whether you need only one or could you have two centers. I don't know. That's a dispute. But I think it's very difficult to put in doubt the fact that at some point you need to grow and you need to scale up. If you don't scale up, what happens? About 30% of the European startup closes, and about another 30% scales up elsewhere. So we are losing 60% of them. This is not brilliant. So I think this is my reply. Having said that, it's clear that till now we have advanced product-wise. There are some products where we have done it, and we have done it well, and there are some others where we have not done it. And what we need to do is move from product to system, to framework.
Back to you, Mr. Hantzinikolaou, just briefly. What additional changes and challenges do you expect to see in light of the Athens Stock Exchange market upgrade?
Obviously, this creates a unique opportunity for the Athens Stock Exchange to scale up, as Mario put it, within the context of the realities we face now. We have our challenges in the local market because of all the things which you talked about. First of all, just to be realistic, we went through a big crisis in Greece, which destroyed wealth. And therefore, the extra savings that would be available to be invested have not been there. So that, and we witnessed that in some drop in the Athens trading volumes, etc. But we see a rebound. We have not seen, unfortunately, participation from the Greek investors as much as we would have liked to. But what we are seeing, on the other hand, is a huge foreign investor influx. More than 60% of the trading that takes place in the Athens Stock Exchange comprises foreign investors. And more than 60% of the holdings of the Athens Stock Exchange currently are non-Greek investments. So if this trend continues and we have an upgrade, what basically it means is that the Athens Stock Exchange at Greece becomes eligible to receive a portion of that global developed market pool, which is huge. And there is a lot of passive money over there, index money, which automatically will be invested. That's enough to provide, if you want, trading volumes for the Greek market for the days and months and years to come. And if we continue our dynamism with the economy, if we show perhaps more decisive reform, which would unleash more investment energy, we may see more from the elective parts of that pool. Because as I said, there is a portion which will come automatically because it's index money. But then there is also the active money which may over-allocate to Greece if they think the projects are good. So I can see basically situations where there is only upside, and the question is how much upside? Is it going to be just the index, or is it going to be also the active? So I think it's good. We're looking good for the time being. And while we are working to fulfill the bigger dream.
Being optimistic about the future, I'd like to finish off with you what you see about the challenges and opportunities. The Greek capital markets have had an amazing couple of years. What do you see as the challenges and opportunities? We've got recent laws being passed.
This is true that the last years we have seen a lot of progress. As George Hantzinikolaou mentioned, the Greek market has changed a lot. We have seen the successful divestments of the fund of the Greek banks and the sales that were done through the stock exchange. We have seen how the last years we had the upgrade of the economy. So it seems that we are going to continue at a specific path. I'm not worried about that. I think actually that we are doing much better. From a regulatory point of view, it is important to make sure that we have always at the same framework as our European colleagues, to make sure that we have the same regulatory and framework in this respect. We passed recently the relevant law regarding the capital markets. But what I want to make sure that I point out at the end, which is because we spoke about the Capital Market Union, let's think that we have right now more than 60% of foreign participants at the stock exchange. Okay, it is important to have funding options for Greece, like the stock exchange. However, it is important also to make sure that these foreign investors do not see surprises in the Greek market different than other markets. So this is why Capital Market Union is important. It's important to have a common regulatory framework. It's important to have coordination for us as regulators. Having sat at the board of ESMA, the management board, for like 5 years now, I need to say that convergence may, let's say, may help us in a way, but maybe we need central coordination through one authority like ESMA to make sure that all regulators ensure that in their countries the regulations are applied in the same way.
It would be a step in the right direction. We will welcome that.
So an optimistic message to finish off, and thank you all very much.